Welcome to the IG webinar on understanding foreign exchange. My name is Stan Shamwe and I'm an analyst with IG Markets in Australia. Before we proceed, please take a minute to have a look at our disclaimer statement, which essentially reminds clients that CFD trading can result in losses that exceed your initial deposit. Forex is the world's largest and most traded market, open 24 hours a day. It is an over-the-counter market, which means that it is decentralized with no central exchange for trading currencies. Forex is also known as foreign exchange or the currency market. Currencies trade in pairs, like the Australian dollar versus the US dollar or the US dollar versus the Japanese yen. Some clients use foreign exchange to speculate on the relative strength of one currency against another. The foreign exchange market is the biggest financial market in the world. Every day, transactions worth about $3.98 trillion are carried out with the market. The major aim of introducing the foreign exchange market is to facilitate international trade by enabling businesses to perform transactions outside their local currency. The market operates around the clock from Monday in Asia through to Saturday morning in the US. One of the major advantages of trading foreign exchange with IG markets is that we offer tight spreads. Almost anything can affect the foreign exchange market and your trades. This ranges from economic data to political stability of a country. One of the most popular trading pairs is the Australian dollar versus the US dollar, which has experienced significant volatility over the past 12 months. Some of the factors driving the pair include the RBA's easing cycle and China growth concerns. We'll now show you an example of how you could trade the Australian dollar versus the US dollar with a bearish view on the pair. Should you decide to sell the Australian dollar versus the US dollar at the current level, which is 0.9224, you'd then open a dealing ticket from our platform, which would then prompt you to enter the size of the contract you wish to execute. It would then ask you to put in a stop loss, which prevents you from losing too much from the position should it move in the opposite direction. We'll then put in a limit of 100, which is 100 points towards your target. This then tells you that you have a margin of 461 required to execute the trade. We'll then press sell to initiate the trade, upon which the trade will appear in your open positions. As we can see, the trade is already down $20 upon opening it, and this is mainly due to the fact that you trade currencies with a spread. It is worth noting that you can access the online forex market using very low trade sizes. For example, with IG, you can start trading currency pairs as CFDs for as little as $1 per point. We offer a full contract and a mini contract. A full contract is essentially worth 100,000 of the first named currency. A mini contract is essentially worth 10,000 of the first named currency. The margin required on the major FX pairs is as little as 0.5%. As a result, a margin on one full contract on the Australian dollar versus the US dollar is essentially 0.5% of $100,000, which equates to $500. The margin on one mini contract on the Australian dollar versus the US dollar is equal to 0.5% of 10,000, which is equal to $50. The less popular FX pairs may attract higher margins. With IG, there's no fixed cost of trading Forex with us. However, traders will encounter what we call a spread. A spread is essentially the difference between your bid and your offer price. Spreads vary depending on market conditions. As a result, when the market's very volatile, then you can encounter wider spreads than when there's less volatility. Average spreads also vary for different FX pairs, depending on how big or liquid the market is. Thank you for viewing our webinar on understanding foreign exchange. For more information on our FX products, please visit the website below. Thank you.